Hi everyone, welcome back to my channel. This is Kat. So far, I've done a few videos about PE history, analyst job responsibilities, and reviewed a little bit about how PE compared to VC. So today, I want to give all attention to venture capital as we dive into the exciting world of VC and VC history. So grab your coffee, hit that subscribe button, and let's explore the ins and outs of venture capital. So people always say venture capital is really the lifeblood of innovation and entrepreneurship. But what exactly is it? Well, think of it as the rocket fuel that propels startups into the world of success. At its core, venture capital is a type of private equity investment specifically focused on the early stage, high potential companies. And these are disruptors, the game changers, and the ones with ideas that could change the world. And this journey begins with seed funding, where visionary entrepreneurs receive initial capital to get their concept off the ground. Then comes early stage funding, which fuels product development and initial marketing efforts. And finally, growth stage funding scales up operations to capture a much larger market. But where did this phenomenon begin? The roots of modern venture capital trace all the way back to mid-20th century. So similar to PE in the 1950s and 60s, venture capital emerged in Silicon Valley, primarily funding the semiconductors and computer technology companies. The legends includes like Arthur Rock and Kleiner Perkins paved the way for what would become the epicenter of innovation. During the tech boom of the 1990s, venture capital exploded onto the scene, financing the rise of internet giants and revolutionized the entire industry. All the companies that you've heard of today, like Amazon, Google, Facebook, they all owe parts of their rise to venture capital. And venture capital isn't just about money. It's about this strong belief. It's about visionary investors taking calculated risks on the groundbreaking ideas. It's not just limited to the tech. It spans industries from biotech to renewable energy, backing the pioneers, shaping our future. Venture capitalists are like the Sherlock Holmes of the business world. They look at the landscape for the next big thing, the disruptive idea that could change the game. But how do they decide where to place their bets? So the answer is always, it's a mix of art, science, and a sprinkle of the gut instinct. There are a few steps. So first up, the sourcing. VCs really scout for different investment through a myriad of channels. So as you can imagine, they have to go to all different networking events, they take referrals or different online platforms to really uncover that diamond in the rough. They actively seek investment opportunities to a degree similar to the PE firms. And once the potential investment is identified, extensive due diligence is conducted. Because VCs actually have higher risks. They actually analyze everything. So they have to go from the big market to the team, who are the team members, to the products or the service that company provides, competitive landscapes, very detailed financial analysis, the legal aspects, and potential risks. It's a very, very meticulous investigation to ensure they're making a smart investment. And of course, once the VC is impressed, they have to negotiate the terms. So they draft the term sheets and outline the investment details, how much they will invest first, how much equity they will get, what's the terms of the partnership. This is actually a pretty long time to really negotiate and make sure both parties are satisfied. And there's a lot of back and forth because, the owners don't want to give up too much equity, but they need cash, right? After that, the VCs, of course, inject agreed upon capital into that startup, and the funding is used for different purposes, like, product development or marketing, or trying to scale up the operation, hiring experts. and further down the line, expanding the business. What's gonna happen once the ink is dry? VC inject more cash into the company. Those cash are really like the fuel of the rockets for startups. Well, of course, money is important, but it's not all about money. The VC provide more than the capital they have. They offer the guidance, mentorship, and access to their network. Imagine, they have a lot of companies that work with, they have a lot of experience and network that can help this particular startup grow. It is a partnership geared towards success. VC investments typically occur in different rounds, as you probably have heard of. The initial rounds might be the seed funding and followed by the Series A, B, C, and so on. Each round aims to fund different stages of growth, with investments increasing as the company progresses. And finally, the grand finale of all investments is, same as PE firms, the exit strategy. VCs look for lucrative exits, perhaps an IPO where the company goes to public, or an acquisition by a larger company. And of course, this is the moment VC cashes out their investments. So that wraps all the contents of this video, the journey of how venture capitalists invest in innovators and disruptors of tomorrow. And remember, it is not just about the money. Of course, money is important, but the belief in a vision that could change the world. Venture capital isn't just an investment, it is in partnership. It is about nurturing the innovation and fostering growth, ultimately creating a better future for the world. And thank you so much for watching. Please hit the subscribe button for more insights on PE and VC, along with other career and industries that you're interested in. And I will see you next time.